my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about mortgage interest rates. Unfortunately, they are moving back up. A lot of major lenders have already increased rates. I'm going to tell you why that is in this video, what you can do to protect yourself from these rising rates, and how long until they start dropping again. You see, we've been making videos over the last 6 weeks or so, and rates have been moving down at a rapid pace. So many lenders move below that 4%, but there's been a big spanner in the works. So in this video, we're going to cover all of that and more. And if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. Last week, 900 new people subscribed to the channel, so welcome to everyone that does. The reason to subscribe is you're going to get all the latest property news about interest rates, about house prices, about investing in property, and much, much more. And let's get some views on this video by smashing like, tickling like, doing something to that like button. That massively helps with the YouTube algorithm and really helps the channel grow. So thanks to everyone that does that. So what is going on? We've had a lot of videos recently where rates have been moving down. A joyous occasion, and that's what we want to see if you own a buy-to-let property or you own a house that you live in, or even if you want to buy somewhere at some point. Rates being high isn't great for anyone in the property game. And so lenders have been cutting rates considerably, and a lot of that was based off forecasts. And so there was a lot of expectation that the Bank of England would cut mortgage rates 4 times this year, and that's now changed, and that's changed significantly. And a lot of this is down to the new inflation data. And so the inflation data came out last week, and the UK inflation went up from 2.6% to 3.5%. Now, the expectation was that we were going to be at 3.3%, so this is higher than a lot of people were expecting. Now, the frustration, and if you watch my video, you probably realise I was really frustrated with this, is that this isn't anything because of what you've done or what I've done. This is what we call supply side inflation. It's mostly the energy costs that have gone up that have impacted inflation, the water rates, which you can't control, and various other service costs that have gone up because the national insurance rose dramatically. And so right now, that is really frustrating. And one thing that is always not weighted heavy enough in the inflation data, in my opinion, is rent. Rents are at crazy highs at the moment. They've been going up as much as 10% a year. And people were really struggling, and rents are going up because of things like interest rates being higher. And once your rent goes up, it's very rarely that it will come down. Now, because of this higher inflation read that we got, that means that the expectations are now that we might only get one more rate cut from the Bank of England this year. A lot of that depends on, do we go into recession? What happens with this trade war in America? Just because we've got a deal agreed, if Europe gets 50% tariffs, which have been talked about, that is going to cause major problems for companies that we maybe export to or import from. And so a global trade war isn't going to be great for inflation or bringing down interest rates anytime soon. The Federal Reserve, the American central bank, has said with this tariff war, they can't cut rates at the moment. They need to wait and see what happens. Does inflation start surging over there? That's what they want to find out. And the Bank of England like to follow the Fed. And so because of all of this stuff, what's happened in the last week or so is the swap rates. These are the rates that your bank borrow at. They've gone up by as much as 1%. Now, that means that your lender, HSBC, NatWest, anyone like that, the money that they borrow has got more expensive, and so it's invariably going to get passed on to you. So who has increased rates already in this only a short period of a week since we had the inflation data? Well, Santander have already increased rates. They did that on Friday. Not loads, but it is going to make a difference. So it's gone up 0.1% with Santander. That's going to slow down people making a decision to buy properties when the market is already slow. Halifax have also increased their rates. One of the big lenders, Halifax, and they have gone up 0.14%, so more than Santander. Not good. And another lender that's been really competitive over the last 12 months and always been fighting to be one of the cheapest lenders in the market has got the biggest increase so far, and that's Nationwide. So Nationwide have increased their rates. It will probably mean that Virgin Money will go up as well, because that's part of the Nationwide group, and that's just not great. So maybe you have a mortgage that's coming up for renewal in the next 6 months, or you probably know someone. So here's what you should look at doing right now. If you've got a mortgage that is expiring in the next 6 months, I would get on the phone to a broker now. Good news is a lot of brokers are quiet at the moment, so they'll be able to help you focus to find a good deal. With a lot of lenders, you can fix a rate 6 months in advance. So you could go to a lender, for example, NatWest, through a broker, or do it online directly yourself, but it's better, in my opinion, to do it for a broker. And you could fix the rate in principle right now. They can put an offer out to you. And let's just say they gave you a rate of 4%. Now, because of the trade war and inflation, mortgage rates then went up a lot, and maybe they went back up to 4.5%, which is quite a substantial difference. You've then fixed your rate at 4%. So that gives you the worst case scenario. You've got the worst case scenario locked in at 4%. But let's just say in 4 months from now, rates tumble, and you can now get a rate with NatWest at 3.25% or something there or thereabouts. Better, anything better than the 4% rate. Because you haven't started that new deal yet, it's just an offer. You can get it swapped. Sometimes there's a little fee, often there's not, and you can move on to that lower rate prior to starting that new mortgage. So what this does is it locks in your worst case scenario. But if things got better because the economy wasn't very strong and rates started to tumble, you can swap onto that better rate. So it's all round a great deal for everyone involved. Now, if you share this video, I'm sure you know someone that's looking to get a new mortgage at the moment. I'd really appreciate it. And actually, this weekend, I bumped into so many people that have used that strategy in order to fix a rate. So thanks to everyone that said hi. Do make sure as well you check out the fundamentals of property investing. It's less than £30 at the moment. I'm going to link to that in the description. You can understand how to buy property below market value, how to renovate those properties, and how to get the best cash flowing strategy off the back of that. So click in the description and check that out. Do make sure you smash like and check out all the other content as well on the channel, including this video right here.